morning and welcome to the Canaccord Coffee Break podcast. I'm Jane Parry, the Chief Marketing Officer here at Canaccord Wealth. And I'm again delighted to be joined by Tom Hibbert from our Chief Investment Office.
Hello, everyone.
Tom, as you know, is our Chief Investment Strategist and here to help me demystify what's going on in the markets, hopefully in a simple and easy to understand manner, so that you can feel more informed, more confident, and more in control of your financial future. So this week feels really important because we've seen markets swing from panic to confidence in just 2 weeks.
Absolutely.
So really unusual.
A remarkable recovery in equity markets, very strong performance in bond markets, sharp fall in oil prices.
So we'll get into that in a minute.
Yeah.
And also investors are sending a very clear signal here in the UK about the UK government gilts bonds.
Absolutely. Very successful gilt syndication or sale from the UK Treasury last week, which is a sign of confidence, I suppose. Although there's a lot of demand for gilts at these high yields.
So let's get into that as well. So grab your coffee and let's dive on in. So as we just said, we have had a very strong start to earnings season, which has helped push equities back to record highs.
Yeah.
But it's the speed of that recovery that's been really interesting in the last week or so. So can you just quickly summarise for us what's happening in the markets and why this is unusual?
Sure. I think so. Global equities gained almost 4% in dollar terms last week.
And it was 4.1 the week before, wasn't it?
Yeah, exactly. Yeah. And the tech sector, once again, the best performing sector, that was up 7.7% last week.
Okay.
But the most striking thing, as you say, was the speed of the recovery.
So why is speed? Why does that matter to investors, I guess?
Well, it's just happened so sharply that you blink and you missed it.
Uh-huh.
It's been a little over a fortnight and markets are already back at record highs. It's almost like there's nothing to see here. Is the sort of it's the market is pricing in no conflict at all, which is quite interesting.
Yeah.
The US last week, the US market gained more than 3% for the third consecutive week in a row.
Yeah,
I think that's the first time in decades that we've seen that. So a really remarkable, strong recovery. Market leadership has been very rotational. So we've spoken a lot on this podcast before.
Yeah.
The stocks that have led the charge, that led the recovery, have been the weakest when the pendulum has swung the other way. And that is still the case. We're still seeing a very rotational market.
So when you say rotational, highly rotational, is that basically investors moving money quickly between yesterday's losers and today's winners, rather than backing one big theme? Can you perhaps give us some examples?
Yeah, sure. Well, we said that markets have been passengers to news flow.
Yeah.
And that's the best example. You have a day like events over the weekend where, you have the Iranian gunboats firing on a tanker going through the Strait of Hormuz when there's supposed to be a ceasefire.
Yeah.
And, the day before, the foreign minister was saying that the strait was open.
Yep.
And then this morning you have equities on the back of that quite weak. And there's a lot of developments and the market is reacting quite aggressively to those developments.
Yeah.
It's an opaque market.
Okay.
And you've got big swings depending on developments in the Middle East.
Okay, so difficult to predict what's going to happen next, I guess.
Exactly.
So what has led the rally then, given that we've still got this geopolitical uncertainty and tension?
Yeah, undoubtedly that's been the most prominent driver.
Yeah,
the
easing of it.
The easing of it.
Yeah.
I think the market has very aggressively rallied on the back of a very fragile ceasefire.
Yeah.
So it's been a
very optimistic, hey?
Potentially there's a little bit of a disconnect there. But then you've also had, if you look through that geopolitical tension, you then have a resilient economy.
Okay.
And we've had earnings season get underway last week, and we've seen some really solid results. We've seen some solid results from the banks.
Yeah.
And that has also helped equity markets maintain the strong momentum over the last fortnight.
Okay, so while equity investors are feeling braver, bond investors in the UK are loudly voting with their feet. It's been reported there has been a record demand for this 10-year gilt syndication.
Absolutely.
Which, as I understand it, is essentially a big one-off borrowing by the UK government.
Yeah, the Debt Management Office has issued a large, about £15 billion worth of gilts, and there's been a huge amount of demand, a record demand for
demand,
that
yeah,
issuance.
10 times oversubscribed.
Yeah, exactly.
Okay.
Exactly.
So who are these subscribers? Who is buying the UK debt?
Yeah, all sorts of people. I mean, a lot of institutional investors
Yeah.
are buying gilts and taking a positive view on the UK government bond market at these current elevated yield levels, which aligns very closely with our view.
Yeah.
But you have all sorts of people, from hedge funds to global hedge funds to UK pension funds.
Yep.
All sorts of
so it's mainly
overseas and domestic
institutional investors rather than individuals, is it?
Yes.
Yeah.
Yeah.
Okay. And so why are they so keen to lend money to the UK government then? Just because they're getting a great return?
Yeah, I suppose the market reaction to this crisis has been very pessimistic.
Yep.
And now it seems that actually the market has reversed that view in a way that at these current elevated yields, there's a huge amount of demand.
Right.
So it's a real vote of confidence last week in the elevated yields available for gilts. And you say just institutional investors, but it's also, there are great benefits for individuals. So although it's institutions that make up the bulk of the buying, gilts are attracting all sorts of buyers, including sort of private clients and wealth demand as well. So a very compelling opportunity, I think, in UK gilts at the moment. If you look at the 2 to 7 year part of the curve, the sort of shorter dated part of the curve, you're now getting up to a sort of 4.4% yield on gilts. That's about 0.5% higher than at the end of February. A very attractive yield in the context of a slowing UK economy. And yes, there's inflation uncertainty.
Yep.
But most models and forecasts still see inflation falling, particularly next year.
Okay.
So economists generally see inflation at about 2.5% next year. There's obviously a lot of uncertainty in the short term, given what's happening in the Middle East. But over the long term, people still see inflation relatively moderate. And yields, higher yields or attractive elevated yields are quite compelling in the UK at the moment.
So in my simple understanding then, if you're getting 4.5% yield on a gilt and assuming inflation stays at the rates being forecast, then you're effectively locking in a real return over the duration of your gilt.
I don't want to say locking in because obviously inflation is an uncertainty.
Yeah,
so if inflation ends up being a lot higher, you end up getting a negative real return. But
where you are today, looking forward,
that bet looks attractive given the outlook for the general outlook for inflation.
Yeah. Okay, understood. Thank you for explaining all that to me. It's probably a good time for me to sum up what is in my Canaccord takeaway coffee cup this week. So global equities have rebounded remarkably fast off the back of 3 key drivers. Number 1, resilient economic data globally. Number 2, robust earnings, which we're starting to see come through now in the earnings season. And number 3, probably most prominently, the easing of geopolitical tensions, although we would feel that last point remains a little fragile.
a little bit.
And again, gilts are back in my coffee cup, offering compelling yields, underscored by record demand for the UK's latest 10-year issue. Interesting
That's
times.
Right.
Yeah.
And I suppose to look out for this week, we've got some more UK inflation numbers.
Okay.
So we'll talk about that on the podcast next week.
Great.
And, still early days for earnings season. We so far have really good results coming through. But we'll give you an update on how that's progressing as well.
Thank you. Well, thank you very much. I do hope you enjoyed the Coffee Break podcast today. Don't forget to hit follow so that you never miss an episode on your podcast channel of choice, whether it's Spotify, Apple or another one. And share your thoughts with us. Ask us questions. Drop us a line. coffeebreak@canaccord.com. Many thanks indeed.
Thank you very much.
Investment involves risk. The value of investments and the income from them can go down as well as up, and you may not get back the original amount invested. Past performance is not a reliable indicator of future performance. The information provided is not to be treated as specific advice. It has no regard for the specific investment objectives, financial situation, or needs of any specific person or entity. It is accurate at the time of recording and is subject to change.